All right, welcome back into Market Day Report. Folks, it's as we approach the noon hour Central Time, we're asking ourselves, is it going to be a noon spoon or a noon balloon? We'll see. Let's take a look at these prices. I'll bring up a corn board, and then we'll see where that was. We were about a penny lower. We're about there right now, I guess. And we're just kind of, as they say, flapping about just to steady a little bit easier. Sep corn's down 3/4 of a cent to 3.82, 4 cents off the lows, 2 cents off the highs. And we've got a D board that's down a penny and a quarter to 3.98 1/2. We're 3.5 cents off the lows, and we're about 2 cents off the highs. All right, so that's what's going on in corn. How about soybeans? What do they look like here? Let's take a look. Sep's down a penny and a half to 10.13. That's about what 7.25 cents off the low of the day, 5.5 cents off the high. So we're kind of in the middle of the range there. The new crop Nob, that's down 2.75 cents to 10.19 3/4. And again, that's 6.75 cents off of the low of the day, and about 6.5 cents off the high. That's soybeans. Moving right along, let's go to the Chicago wheat market. This has now got some good upside to it here. Sep's up 6 cents to 5.33 1/4, and that's just a penny and a quarter off the high of the day, well off the lows by about 14 cents. If you move out to the March, that's 6.25 cents better there to 5.79 1/2, a half cent off the highs there, and again, well off the lows by about 12 cents. So wheat in Chicago, building a little bit of a base there, feels a little stronger. Let's take a look and see about the hard red in Kansas City, and that too is following in the footsteps of the Chicago wheat market. Sep hard red is up 7.25 cents to 5.56 1/4. That's a new high. If I had a bell, I'd ring it. That's good. March is up 6 cents to 5.86 1/2, and that's just a tick off the highs there in March. So that's the hard red in Kansas City. Let's see about the spring wheat. Is it following suit? It is, but by about half as much, right? Sep's up 3 cents to 5.84 1/2. It's about 4 cents off the high of the day there, so it hasn't really powered through like the other two have. March is up 2.25 cents to 6.21 1/2, 5 cents from the lows, 5.25 cents from the highs. All right, so spring wheat kind of in the middle of the range. Cotton, struggling here today. This is the Dees new crop, 91 points lower to 68.08. That's 28 points off the low of the day. That brings us to our next guest analyst, Tommy Grisafi. He's with Advanced Trading in Valparaiso, Indiana. Tommy, an interesting day today. Wheat's kind of come back a little bit. Are we going to see maybe some green on the screen when it comes to corn today?
It's possible. We definitely flushed out some weak longs. We're hitting that time period where the last of the old crop's really starting to leak out. I guess that could be all month August, but if you have old crop, you got to be shaking your head with just you're disgusted. But we knew this could happen. You know, you and I, we've been doing the show for a while. We talked about it, and you would say things like, "Do you really think we can go that low?" We can really do some crazy things in markets, and we're not running out of anything. We never have. We throw some acres getting flooded, some the funds are short. There's maybe this is the yields down. It's hot, but we were never running out of anything, and that's the problem with the grains. We could have a vicious short covering rally, which I expect. We started to have one last week and then gave it up. But at any point, it wouldn't surprise me at all if you notice that corn was up at the end of the day. Bigger than that, though, is what's happening in the outside markets. We're seeing some significant moves in the Dow Jones. I had a chance to join you at 8:45 today here on the show. And back then, way back at 8:45 this morning, the Dow Jones was up 200. NASDAQ was up big. Dow Jones down 600. NASDAQ down 400. S&P's down 70 after being up 50. Bitcoin down 2,500. Copper down. Now, something that's not so much grain related, but I think you should know, what is very much grain related, the bond market's exploding. The 10-year yield's below 4%. We've seen a shift. You would think with, interest rates are going down, stock market's going to love it. But truly, if the Fed can afford to lower interest rates they have priced in right now, the market, 3/4 point lowerings, how great is the economy? And I think you're seeing that readjust. Now, in a little bit, we'll take a break. We're going to talk cattle because I think cattle are very much being affected by what's happening in the outside markets. It's the 1st of August. You're seeing billions of dollars coming in and out of the markets in all the markets. And we do our little sector of grains and livestock, but I watch a lot more in that, and you're seeing money flow today, Scotty.
Yeah, this is, I thought maybe there was more to it, but it's not. Sometimes it's just as simple as what you think. And I was perplexed by the Fed yesterday coming out and talking about this September rate cut that everybody's been talking about. I mean, they didn't say it as blatantly as that, but they definitely inferred it. And which really kind of confused me. And I thought it was all going to be about the words yesterday, which it was. everybody was really excited about getting rate cuts because we've held them so high for a while here, and we're at 20-year highs only because we've had rates way too low for too long too. But it was kind of, I said it yesterday and I said it again this morning after I got off with you, but it was kind of like I didn't get the Fed. Sometimes they're too transparent. It's like your doctor coming out and saying, okay, yes, you do have an infection. I've got a prescription for you at Walgreens. You can pick it up, but you can't start it for 60 days.
That's what they did. Yeah, they should have lowered rates yesterday. They
right. I'm not
should have lowered rates yesterday.
I'm not saying they have to lower them or hike them. I'm not making that point. I'm making the point of, if you think you need to lower them in September, you probably need to lower them now. Why aren't you doing it now? And I tell you right now, I've looked all over the place to see why this move is happening, and I think the market's punishing them for that delay. That's what's happening here. So we're going to go away, and we're going to pay some bills. We're going to come back and talk more livestock because they're jerked around by it too. We'll be right back after this. All right, welcome back to Market Day Report. This is where we take a look at the livestock. And like I said before we went to break, they're kind of getting yanked around here too. And we've got some lower equity boards. Maybe that's the reason why. Let's take a look and see what live cattle got for us here. We're off $2.62 in that October live cattle board. 184.05 is last there, but we have been a lot lower. Look at that, 183.27 was the low. So that's a decent downdraft there. We're off $3.05 in D's to 184.82. So we're kind of taking it on the chin here in live cattle. Here's feeders had some decent losses here today too. Look at September, that's down $5.30 to 251.80. We were a whole dollar lower at one point today. 250.80 was the low, so we were down 6.30 at some point in time. We've got the Nove feeders down to 507 to 250.05. All right, that's feeder cattle. We're both taking it on the chin there in the cattle markets. And then the lean hogs have not gotten the memo. They're stubbornly better on the day, and it looks like they'll probably stay that way. October's up 97 cents to 76.90, and that too is only about 22 cents off the high of the day there. Feb's up 25 cents to 72.70, and that too is only 32 cents away from the high of the day. So lean hogs, they're the gold medal winner here today. Let's get back to our guest analyst and see what he's got to say about it. Tommy Grisafi, Advanced Trading in Valparaiso. 60 seconds to you, sir. Have at it.
Well, it's been too easy to be a bull in cattle, and today's a great reminder. Again, just flashing back to when we were on the show at 8:45 today, I said it would totally be normal to see a $3 to $5 pullback in cattle. We've done it, right? We're 2.5 down in the feeders. Big move there. It happens quick. I was thinking over the next week, not the next 2-3 hours, but we did it, and risk has happened. I was joking around with you on the show. I wasn't joking. I was being serious. That use every tool in the toolbox: futures, options, LRP, whatever you have. I have a friend who's a big speculator. He bought 100 cattle puts out for December. He doesn't even have cattle. He's just that sure that this inflation coming down is going to affect all the commodities. And he's always been waiting for the shoe to drop in cattle. He's having a good day. Back to you.
Well, I tell you, if you look at the Bloomberg Commodity Index, that's getting hurt too, and that's kind of a broader index that we all kind of follow. And so this could be arguably a deflationary cycle we're entering here, folks. Just kind of keep that in the back of your mind. It's kind of an interesting one. We'll see what the property market does on the back of all this. Yeah. There's a lot of knock-on effects. Thanks for coming on, Tommy. Tommy Grisafi.
See you, bud.
He's with Advanced Trading in Valparaiso, Indiana. We're going to go away again and pay some more bills. Things are expensive here. We're going to come back with all your other weather and everything else after this.